Hi folks, today I just structured a trade, a relatively new one. I'm using a quite advanced strategy, but I want to share with you because the context of the trade is quite interesting. So I'm using what we call it double diagonal or double calendar to be exact. In this case, I just let you know I placed an order using that strategy. Here you can see double diagonal, but in fact it's a double calendar spread. I just enter with 3 contract, and just less than 1 hour the trade is generating quite a decent profit for me already, $200 plus. Now I will explain to you why this trade is working well right now and in what context I will be losing money. Okay, so basically I've been thinking about Boeing stock price has been dropping quite a lot since the accident, the latest Boeing 737 Max, and the stock has dropped almost 100 points from 440 something now down to around here today right now at 368, 67, 68. So that's where the stock is right now. The thing is, I really don't know which way the stock will move to in the next few days or even few weeks. On one hand, bad news continue to come out. All countries have now grounded the airplane, and basically Boeing 737 Max, I don't know when it's going to take off again. And there will be a lot of liabilities. Some airlines already filed lawsuits against Boeing. Even some countries are doing it as well. So bad news are coming out. We just really don't know, has it on factor in the current share price, or we will be dropping further. Or somebody even say that the investigations can go beyond the 737 Max, but yeah, it can go to different types of aircrafts as well. So if that is the case, then Boeing, the fundamentals of the stock could completely change, right? We really don't know if that's true or not. If you look at the past history, there has been quite a few cases where they also got quite a significant disaster accidents, and the stock price recover after a few months. Now, if we believe that the stock price will continue to go down from here at the 367 right now, it could go lower to around 350 or so, right? Now, to go to 350 from the technical standpoint, the stock price has to cross to the key support levels, which is around 360 here, which is where the 150 and 200 moving average lines are. So if it breaks and it can find another support at 350, where it had been fluctuating over that level for almost a year, right? So for me, that's one theory. The stock price will continue to drop from here. But on the other hand, given the magnitude of the price drop over the past few days, people can say that, hey, a lot of bad news had been factored in, and the short seller may be happy with the profit they had, and they may be taking profit anytime soon. In that case, expect the stock price to bounce from here. Now, if that is the case, then I would expect the stock price to bounce around to around 390 level, which is also coincident with the key resistance level. That's where the 50 moving average line is right now. So for me, it's really 50-50 chance, right? Either it goes down to 350 or it goes up to 390. So I'm going to place a bet using options. Okay, in that bet I would benefit either the stock price drop or the stock price will go up. Okay, so, and even if it stay within that range, I would make money as well. So what I'm thinking is, okay, I go to the trading platform right now, right, and trade. So if I think the stock price will drop, the simple way of making money from it is just to buy a put, right? Buy a put because you think the stock price will go down from here. And if you think the stock price will go up, simply buy a call. So I can buy a put and buy a call at the same time. If stock price move one way or the other, I could make profit, right? It have to move enough, so for me to make profit. So buying an option, right? The general rule of thumb is you don't buy too short of the date to expiration, because that where the theta, the time value will decay the most. So I will choose at least 30 days, if not more, right? So I find something like 34 days, right? So what I did was I just simulate what I did just now, right? So I bought one put option at 350 strike price. Okay, so I bought this one. At the same time, I bought a call option with the strike price of 390, which is this one. That's where I bought a strangle, right? I bought a put, I bought a call, so I benefit if the stock price go way up or way down. You can look at the chart from that, right? You will see if I just stick into that trade that I'm simulating here. Maybe you cannot see big enough, so let me change the color to okay. So you see the blue line is a P&L line at the expiration date. I will benefit, which is above the zero line here. I will make profit if the stock price go way above current levels to 400 something, or if it drop way below from this level to 335 something. Okay, so I will benefit from sharp move one way or the other. But it's very expensive. You buy a put, you buy a call, just one contract alone, it cost me like almost $15. So $15 per share times 100 shares, that would mean it cost me $1,500 for one contract. And rightly so, right? When you buy a call, buy a put at the same time, time decay hit you from both sides. Price doesn't move enough, you will lose money. So I have to find a way to reduce the cost. To finance the cost of my long dated options, I have sold short dated options, both long and put, to reduce the cost of the other, right? So what I did was I sold the 350 put. At the same time, I also sold 390 call. And you will see my trade here. I long the April call and put. I'm short on March 22nd. And that reduced the cost for my trade from roughly like $14 or $15 now down to about $11. So it cut my cost by 1/3, right? And if you look at the P&L profile of this trade, right, the double calendar or double diagonal here, and then you just remove the old trade. Okay, so here's the P&L look like. Alright, so the zero line is a break-even line, right? You can see the P&L chart at the expiration date, which is in the blue color here. I will make the max profit when either the stock price goes to $350 by next Friday, March 22nd. Today is March 15, right? So next Friday, when the stock price close at 350, I will make the max profit on the put side and the total trade, right? Or if the stock price bounce to 390 by next Friday and expire right there, the total trade would make also max profit for me. Now to really know what is the max profit, I just need to hover the mouse here, and you can see from the blue number, I would make somewhere like 500 plus or 500 plus here. So that's my max profit, right? Now where's my break even point? Just go to the menu here, set slices, break even at the next Friday. So I have quite a wide range of profit zone, anywhere between 341 to 401. That is my profit zone. Okay, it stay right here, I also make money. It goes a little bit lower, I make more money. Go a little bit higher, I also make more money. Only when it go beyond, either below 341 or above 401, then I lose money. What is my max loss? My max loss is actually my debit that I pay at about $1,000 for one contract, right? Now, when it going to happen? When it dropped way below the current price. So as you can see, if it dropped to even like 310, I would still not make a max loss, right? It need to drop like below 300 for me to lose on my max loss. Now, on the other hand, if the stock price go way up beyond 440, 450, then that's where I almost hit the max loss. Now, 450 is the on-time high, right? So expecting the stock price to go from here, crisis, to on-time high price in a matter of a week, it's unlikely. So I'm very confident that the stock price won't move beyond my profit zone in the next 1 week. So I like the trade a lot, and that's why I did 3 contracts. Okay, so when you increase the number of contracts into 3 times, then everything triples, right? My max profit is also triple. Now it's like 1,005, 1,006, and my max loss also close to 3K. Either it's go down so much or go up so much. And guess what? If you enter the trade right now, you pay 960, right? You pay 960, but just about an hour ago, I got the order filled at 930. So it's cheaper, right? It's cheaper. So now if you enter the contract right now, you have to pay higher because some time has passed and it brought me some money. So I made like 90 or make $100 right now, right? On the trade with a matter of an hour, right? Now, price will move in the next 1 week, so anything can happen. We'll come back and we review the trade on how it goes. But again, we know very well in advance what is the profit zone, how much is the max profit, how much is the max loss, and in what scenario I will hit the max loss, which is very unlikely, right? Now, I show you how to do it in Thinkorswim. Let me also demonstrate it, the real trade here on IB, right? Interactive Brokers platform. So for those of you who do not have the account in Thinkorswim, you can do in IB as well. Now I use my real account, so it's also, you know, the real trade here. So if you want to trade option, just click on option trader and it pop up a window for you. And under the left top box here, just type the securities you want to trade. You want to trade BA, just type BA and enter, right? And then choose stock, right? And I have it already, so I don't have to load it again. So after you enter the security, the system will load on the data. Now you are trading a multi-leg option strategy here, so just choose the strategy builder. That's where you can enter leg by leg for multiple legs trade, right? So remember, the trade has been choose the long date to expiration, April 18, right? That's where in the other platform I bought 350 put, right? So here I also am buying 350 put. I click onto the ask column and then I go up and I buy 390, which is this one. Click on the ask also. I buy a call and I buy a put, right? So actually I'm buying a strangle. Now that is a long dated option. To finance the cost of that trade, I need to sell a short dated option to reduce my cost, right? So I go to the short dated option. Where is it? The one that expires next week, March 22nd. I will do a similar trade but on the opposite side. So instead of buying, now I'm selling 350 put. I am also selling 390 call. So you can see here I have 4 legs. the April 18 I buy 350 put and I buy 390 call. On the short dated option March 22nd, I sell 350 put and I sell 390. So you notice the strikes are the same either on the put side or on the call side. So it's the calendar basically. So with that, now if I enter, I have to pay like $9.87 for the trade. If I go to the Thinkorswim platform, I check it out if it's the same price. Yeah, market changes, so perhaps you can get at like $9.70 or so. So go back, you bargain a little bit, $9.70, right? So maybe you start with 65 cents. Okay, $9.65. Let's say we do 3 contracts and transmit, right? So max loss is 2904, right? And enter. Okay, so it's pending there, but if let's see how much we have to pay, a little bit more than that. So I think the market price,
order partially filled.
It's already filled partially.
Order filled.
Now it's fully filled. So go to the trade, and you see the trade log here showing I already got the order filled in 2 batches. The first one 1 contract, the second one 2 contracts. So 3 contracts in total. If I open it up, I have the forex filled at different prices here. So in total, I have 3 contracts filled at $9.65. Okay, so that's how you place the trade in IB, and hopefully the trade will work for us in the next week, because the short dated option will expire next week. And by the way, as I calculated, this trade would have a net theta of about $120. 120, meaning every single day this trade will bring us $120 per day for 3 contracts, assuming prices, theta, volatility on are unchanged. Right now, of course, it will not be unchanged, but it can fluctuate back and forth, but that's what we are hoping for, right? So the theta work in our favor, and that's why I just entered the trade for an hour. I already started seeing some profit. Now the profit is actually higher at 166. So that's how you use option to benefit from the market move one way or the other. And while you're waiting for the stock price to move, you benefit from the theta decay, and it works for you. Hopefully that gives you some idea of using options to customize to the very specific situation, in this case for Boeing stocks.